Most advisory models start with the client in the driver's seat, and that's why it can fail. Darren Van Zyl from Elements Advisory Group has flipped the script. He uses an advisor-led approach which starts with small, bite-sized engagements that open the door to 90% conversion rates. Darren's firm uses Fathom for financial performance assessments and ongoing analysis and reporting. They deliver strategic planning with a balanced scorecard and a strong focus on people and then process to foster ongoing client relationships. And that's just the start for this firm that delivers a full finance function. It's a great approach and it's proved profitable for Darren's firm. Dive in to learn more. Welcome to Fathom's Expert Series. We chat with advisors, accountants and finance leaders to learn how they're using Fathom to deliver clarity and confidence and help businesses thrive. We're talking processes, top tips and key learnings. Join us for a great conversation. Hi everyone, welcome back to the Expert Series. We are super excited today because we have a very long-term customer of Fathom in the form of Darren Van Zyl. Darren, welcome to the Expert Series.
Thank you.
Now you might recognise Darren. He's done a few events for us at Fathom. He spoke at a number of our advisor events last year. So Darren, over to you. Tell us a little bit about your firm. I know you said the other day you're flat out, you don't need any more clients at the moment. Everything's running really well. So tell us a little bit about it.
So our practice started officially in 2012. Our point of difference was that we actually started the practice without any tax or compliance work, which made it really advantageation for us because we had a bit of a clean sheet of paper on, we didn't have the pressures of what I call the compliance vortex that, we go through the regular cycle of tax return lodgement into FBT lodgement into tax planning, take a holiday, and then straight back into tax return preparation. So we were able to really look at this area of advisory services, and we built it essentially from the ground up with only our advisory services. And we were successful in productizing and standardizing our process, making advisory services a process that is relatively standardized for most clients, varying levels of complexity, but fundamentally the same process for all clients. And what that enabled us to do is we grew very quickly with a lot of retainer-based advisory services work, which made life a lot easier for us as a practice because we were able to plan our resources effectively, our capacity well, all those sort of things, which are some of the benefits of that model. But I guess the overall success of our model was that we, in essence, unlearned some of those traditional practice management, entirely with it leading into a client with a tax focus. We led into the client relationship with the advisory, seeing the other two aspects of the accounting service being tax and compliance and bookkeeping. Those were sort of the supporting activities that underpinned the advisory conversation. So that we really focused on that as the lead generator. The first conversation we had with clients, it wasn't about tax. From a tax perspective, the first conversation was about financial performance analysis for the client's business.
Can you describe a typical client of yours?
Yeah, so a typical client of ours is not necessarily revenue, not necessarily qualified on revenue. I think our view is we are more interested in the growth potential of the client and also the business owner themselves, because in some cases business owners want to grow, most businesses want to grow and improve, but not everyone wants to do the work that's necessary and really go on the disciplined, hard journey of growing a business well. It's difficult. So we really target ensure that the client's the right fit for us, so that we can work well together.
How important is that?
Very, very important, because ultimately we know that, our advice is effective and it's good. But if the client doesn't take the advice, then, then there's always a question about what's the purpose of the engagement. It needs to be actioned, and that's how we can achieve the growth. Because ultimately, if the client doesn't take the advice, then it's not really a whole point in us being there. And we're very comfortable with that because it's got to be a mutual relationship. It's almost a partnering style relationship.
Yes.
So
you're sensing how much will they have to get in there.
Yeah, and just hunger to learn and develop and to make those decisions that are hard. And that's an important criteria. And then really about the growth potential of the business, because we've historically had bad results with low or no growth businesses. For example, what I'd say is lifestyle businesses, not exactly a great client fit for us, because the drive of the business owner is not necessarily to keep growing and building. It's to, ensure that the business, supports the lifestyle. And that's totally fine. There's absolutely nothing wrong with that. It's just that we don't have the best results there because we're constantly pushing to grow and, work on the gross margin. And, here's the forecast, and if we put this in our growth, and then these are the things we've got to work on. And that's not necessarily a useful conversation for them. So there is a specific type of client that the advisory service fits around really nicely. It's high growth, really driven business owners that have financial struggles as a result of that growth. Our job is to understand the growth, and then what are the financial performance parameters that also need to be in place beyond just revenue. Because, as they say, revenue's vanity, profit is sanity, cash flow is reality. It's that sort of, our job is to help understand that and sit around the client and support them, not tell them what to do, but support them in just working through their growth strategy and unlocking that.
And how quickly can you identify whether the business owner has that mindset?
I think it's that first, a big part of why we deliver our services. And there's 3 key upfront projects that we deliver for the client, which are one-off. We call them bite-sized pieces of advice, but it's really that first engagement. That's the best opportunity to test for engagement, to work through things and understand sort of where they're at in terms of understanding their business. And so really that first piece
couple of weeks, like a couple of months.
First month, really, because that's something that we try and deliver that
pretty quick.
Yeah, pretty quickly.
Yeah.
Tell us the approach that you use at Elements Advisory, where you're focused on that more client-led advisory versus firm-led. Can you tell us a bit about your approach and what are the drawbacks with the client-led approach?
So we, in a few of my presentations, I've spoken about the idea of a client-led versus an advisor-led service offering or the advisory model. And probably the distinction is that a client-led model is more reactive in nature, and it's still a valid service. It's still a common service that accounting firms are providing. It's probably the most common advisory service that firms are providing, because it tends to be more one-off, non-uniform engagements and fulfilling an immediate need that the client has. And again, nothing wrong with that, just that it tends to have a lack of continuity to the engagement, because what it typically could be, as an example, is if a client said to their accountant, we've gone for some funding at the bank's asked us to provide a 3-way cash flow forecast, can you prepare that for me? Then that is the type of client-led service. It's them requesting that service, and we deliver that engagement, prepare the budget, hand it over, and that might be where the deliverables stop, and that might be the last time we hear from the client until, say, tax time or something like that. So an advisor-led model is quite a bit more proactive in that it's pushing deliverables to the client as opposed to them requesting it from us, and it's more proactive of taking the client through on a journey through that process to help them improve, and it has a lot more repeatability, has a lot more structure to it, and probably consists of, multiple touch points with the client. So the reason why my opinion is that a client-led model is difficult I think it's part of the reason why the profession hasn't necessarily advanced in its onboarding of advisory services that well. There's been a lot of false starts with firms might have a period of 6 to 12 months of really trying to strategically bring in advisory services that maybe ends up pulling back on that, because I think this might be one of the issues, that it's client-led. And I think there's some shortcomings in that those engagements tend to have a lack of structure and process. It doesn't fit within a broader process. So it's really a quick one-off engagement, which makes it difficult to commit the training time for new talent and to find new staff who you can lead through that training exercise or lead them through that deliverable, so that when they get the next one, they know what they're doing, because we don't know when that next one's going to be. It's reactive. So why invest the training time if we don't know how many we're going to have to deliver? So then if we don't have the process and the structure, and we don't have the team trained and ready to deliver it, then it's not scalable. So if I had 10 of those that arrived on day one, it's difficult to actually deliver that and to grow that and scale if we don't have that repeatability and structure. So if those things aren't there, then the shortcomings are that really it's very difficult to meet those milestones, because we don't have enough quality control that professionally we have to have. We haven't developed all of those aspects of the engagement. We might not have the right technology stack to deliver it. We might just be trialing apps here and there to try and get it done. And ultimately then the result is that we blow out timeframes, and then we're not delivering in full and on time to the client. So if we're not able to deliver in full and on time, and it's taking too long, it's going to cause frustration, and then there's ultimately potentially a lack of profitability on the engagement because it just took so much time. It might even be write-offs. And so from a traditional accounting firm perspective, you avoid write-offs. You want to avoid those things. You want to avoid when the risk is outweighing the fee structure that's actually there. So ultimately then the other side of it is that potentially you overcharge for the engagement because you spent so much time on it and you're charging by the hour. So, and the client's saying, well, I just needed a budget. I didn't need a $15,000 project to be done. So you got this kind of frustration with the client on that. So ultimately all those things point to just lack of engagement from clients. So there's this cause and effect of all those things that make it just not sustainable for firms to really roll it out and embed it as part of their culture and then their service delivery because of some of those things.
Yes. And do you think, Darren, it's a mindset shift as well to where the advisors realise they're constantly working on the business? Like if you're thinking of the more firm-led approach where you've got a growth strategy in mind, is that the mindset shift that you're thinking, instead of just piecemeal bits and pieces, we've got a plan and I'm constantly working on your business?
Yeah, and you build the mindset changes. We all want to have a great relationship with our clients, but when you're in that more proactive space, your relationship with the client is ultimately better because you're talking to them so much more. If you've got a fixed fee arrangement, the client doesn't have that fear of picking up the phone.
Telling you I'm thinking about doing this.
Yeah, and they get a bill the next day. So your relationship is naturally better with the client, and so therefore culturally you're probably going to enjoy working with the client more. It's not just a quick...
It's not a transaction.
Yeah, a quick transaction and just get that done and then move on to our tax work. So it is a mindset change, and it needs, there's various ways of structuring that. I think firms, the client-led model is typically the tax advisor that might be delivering those one-off pieces of advice, but it's getting crammed into that tax cycle. So potentially it's about teaming, where you've got an advisory, someone who's really strong on the advisory aspects, who's supporting that tax practitioner to deliver a joint engagement and a total package to the client. That's difficult for accountants. So they probably like working on their own clients more, just personality-wise. Possibly that's the reason as well. So there's just all those things that make it a bit tricky, and I think that's why there's been these false starts over the last 10 years, but still growing demand for that work. So.
And you think there's just been an increasing demand from clients for this because it accelerated at a point in time?
Absolutely. Well, I mean, the pressure points, just even over the last 4 years, off the back of, in the lead up to COVID, off the back of COVID, because initially there was panic with COVID forget about whether they qualified for JobKeeper and all those sort of things, but about what do I do if my revenue drops by 40%? What decisions do we make? And that's a significant demand for that conversation. That created that conversation for many of our clients. Then in the middle of COVID, it was, how do we've got this unbelievable demand for, as in the client had so much demand for their product or for their services, they couldn't get enough stock because it was all, anyone who was an importer would have struggled just incredibly to get stock in time. So that was a huge issue in terms of how do we manage our working capital. We've got great demand, but we need to invest heavily in stock. So how do we finance that? What cash flow implications does that have? And now, off the back of that, it's been questions like, with interest rates at all-time highs,
how do we sustain
business finance, interest bills that were literally double what they were over COVID, but profitabilities remain the same. So how do we deal with that? So there's just these, as the economy evolves, there's so many different conversations that one has to have, and, so many different areas. It is a never-ending, there's always things to work through with the client. It's not as though we're creating demand. It's naturally there because, clients really need that fast, agile advice as the business evolves through the economy and all these different stages in its life cycle.
Do you think there's a sort of sociological thing, as in people are much more savvy around financials, as in they know that they need this information? Do you think it's
100%? I think most business owners are quite conscious that they need to be looking at their numbers. I think they might have had some bad experiences that have taught them that, or they might have some mentors that have said to them, you've got to be looking at numbers and at least understanding them at a high level. And with all the power of
Instagram,
social media platforms, YouTube, you don't have to look far to see, there's a lot of knowledge out there that points to business owners have to really understand their numbers. They don't have to be financial experts, but they've got to understand at a high level what the numbers are telling them.
Yeah.
So.
Okay, let's move to the next one.
Okay, so the antithesis of a client-led advisory model is an advisor-led model. So could you tell us a bit about that?
Yeah, so we've always, as we've gone through in our presentations, I guess we've taken a pretty transparent approach with how we deliver our work, but we've broken our services, the model up into two aspects. There's an upfront services component that I think is really, really critical to not rush. And sometimes there's a perception that we need to rush into an ongoing relationship and straight into monthly meetings with the client. There's probably a number of steps that we have to go through before that actually comes in. So that the notion of an upfront upfront projects and then leading into an ongoing services deliverable component. So we break up our upfront services into 3 components, and they start from almost left to right, that we will, in most scenarios and referrals that might come through, we would promote that we deliver this in 95% of the cases, the same process. Again, different levels of complexity, but the same process fundamentally. And the first part, if we meet a client for the first time, is to deliver what we call our financial performance assessment, FPA for short. No amazing creativity around the name, but it is what it is.
The pulse check.
Yeah, that's right. It's a health check. You could call it whatever you like, 360, anything like that. But it's really centered around that first question with the client: how's the business performed historically? What's the we call it 7 key aspects, of financial performance, but from 7 different angles, how's the business performed? And that is our way of learning about the client's business in a nice, again, bite-sized piece of advice, but learning about the business, going through the numbers.
Annualised?
Yeah, that's right. Yeah, we would go through maybe the last 2-3 years of financial data. Gives us a great idea about the quality of their accounting, because if the quality of bookkeeping isn't great, then that's going to make the analysis really difficult, and we may have to pause, get some things cleaned up before we can really look into it.
Question on the data. Do you only take clients who have got their data in the cloud?
We have a very strong preference towards, Xero. However, a number of clients are outgrowing Xero, so we might have platforms like Microsoft Dynamics or NetSuite, Finance One, NetSuite, those sort of things. So, doesn't necessarily, ideally, yes, but as long as they can get us the numbers, then that's fine. And so that's the first point of call, to go through the numbers. We issue a report. We have a really simple conversation with the client. And the great thing is, because it's a small engagement, we can turn that around fairly quickly. Give the client some immediate value and takeaway, that even if they didn't talk to us after that point, they at least got some takeaway value, some things to work on. Because
practically, how long did that take, Darren?
To deliver? Yeah. 2-3 weeks. Probably less if their data is really good. That's something that is really important to us, to start there, understand the business, get a really clear picture of how it's grown, what some of the issues might be. We, with all those metrics and things that we look at, we always go by the breakdown of what is it, why is it important, and how do I change it? So how do you change, if you take gross margin, what is it? Giving the client a bit of an education on it. Why is it important? Well, it helps you understand whether you're delivering your services or you're selling your product at a sufficiently priced level to actually help fund or cover some of your overheads in your business, or whether that's enough. How does that compare to industry benchmarks and things like that? And then how do I change it? Well, then we help them understand what the drivers are on those results. So there's an education aspect to it. Again, that's the takeaway value that we hope they can have. And if they took that and just ran with that, then there's still some value there. And the idea with these bite-sized upfront projects is that we don't sign the client up to proceed with everything all at once. We'll talk in a moment about overwhelming the client up front with all of the great things that we can do for them. Sometimes it's just a nice way of just starting. Let's just start there. Let's just go through your numbers, have a conversation about how the business has performed, and then we can go into the next steps. We still talk about the wider plan, where we're taking them. We don't try and lock them into the delivery or a $50,000 contract in our first interaction. The next step is to go through then, if we know where you come from, where the business is, what some of the issues are and what we need to consider, then the next question is, well, what are your goals? Where are you going with the business? And how do we establish get some of the strategic ideas that you may have in your head about growth plans, ideal exit position. How do you want to, how long do you want to be in the business for? What are your goals? Getting that into a really simple strategic execution tool. So we use the balanced scorecard. It's a really basic, simplified strategy execution tool.
Yes.
It's really centered around action items, accountabilities. You can probably build a balanced scorecard pretty simply in Excel with just having some action items, accountabilities, a few KPIs listed under some key headings and strategic goals. It's nice and basic. But the idea is then we can publish a light strategic plan that talks about how we're going to improve, what do we need to do to improve maybe some of the financial issues that we identified in the FBA, what are the strategic goals, what are the action items. So now second conversation, the client's now saying, someone's helped me understand where the business has come from. I've now got a clear picture, or at least some degree of tangibility to my strategy. And then the third missing component there is strategy is great, but if we don't actually convert it into numbers, what does it actually mean from a profit perspective, from a cash flow perspective? You may have fantastic growth plans in your business, but when we actually flush it through a cash flow model, we might actually need $1 million of funding to achieve and unlock that growth. So working capital funding is a really, working capital and how that moves in a high growth business is a really critical discussion point. So again, after those three conversations, the client, they know about their history. They've got maybe some fogginess cleared up about why profit didn't equal cash and all those sort of things.
And we just should point out, you do that part in Fathom.
Yes, that's right. So the tool that we use is obviously Fathom to deliver that. And then they've got an idea of their strategic plan. What are my goals? What are the things I just have to execute on in the next 12 to 24 months? And then what's my budget in terms of what is the financial numbers that are actually going to help tell me whether I'm on track or off track. So pretty simple logic, I think no rocket science to it, but as I said, we only proceed to the next project once the client says they're happy to go to the next level. And so once we get to the end of that third conversation, they've got a great understanding of our capability. Yes. We've got a great feel for them in terms of their understanding of their business, their motivations, their goals, just in terms of whether they are a good fit for us as a client and whether we're a good fit for them, all those sort of things. And then we can go into that ongoing services component, which is really centered around now we establish what we call a board of management or a bond process. Okay. It's an advisory board, effectively. It's not a statutory board, but just a simple advisory board. Typically a monthly meeting structure, and we meet with the client on a monthly basis. We will go through the financial performance assessment, essentially evolves in Fathom into a financial performance monthly report. And that's a templated, customized report that we build for the client. It's tailored completely to their business in terms of what we have a general format, but it's tailored exactly to their business. So the things that we felt are important we need to deal with and highlight for the client. We have their strategic action plan essentially as part of the agenda.
Within the same board report?
Yes. Yeah. Well, within the same meeting in the agenda, it covers the finance, it covers how are you going, those things that you said you were going to do when we build that strategy, how are you going with them? And that's the really critical accountability that I think a lot of small business owners or SME business owners really need is they don't necessarily have anyone at the top who can challenge them. It's typically them providing the guidance and direction, but just someone to test, I think, what we call the emotional decision making. Okay. Making decisions in the absence of objective numbers and objective facts. Yes. Just making a decision because your emotions are driving maybe the way you see the problem or whatever it might be. But that's so the finance report or the financial performance report, the action items, and then within that financial performance report is the budget, the actual that we had built in that third step. So sort of just always referring back to those things, bringing them back into the conversation. And then as we progress through the year like that, then we get into around May each year, we'll look at that strategy and do a bit of an update. So what might have changed? What are the new things? I mean, COVID is a great example. It came out of nowhere. By March, everyone was wondering whether they were going to have a business, whereas probably in December, it was business as usual. So things can change very quickly. So we like to just talk through those, set those new action items and targets and things like that for the next 12 months. And then we update that budget in June. Budget flows into their Xero file, into their accounting system or Fathom, and we carry on with another, their next round of monthly meetings. So that creates, that productized process has significant levels of complexity in terms of, variation in complexity, because some clients might just need a really simple report. They don't have a complex business. Other clients might have divisional reports. So obviously the divisional analysis or the tracking category analysis in Fathom is important. We might have key management personnel coming into those for a section of the agenda where they have a specific report that we create for them in Fathom. Might be a division, and they're accountable for those numbers. So non-financial data for the more complex clients, non-financial KPIs come into the mix, all those sort of things. So like I say, it's not a one-size-fits-all. It's actually that there's a standard process, but we build on it and make it a bit more bespoke depending on the client.
And do you find, Darren, that a more educated client is ultimately going to be a more engaged client? When you spend the time at the start educating them?
Yes, that's right. I mean, not when they join us, they don't have to be.
But in the process that you go through.
Correct. It definitely builds over time capability for clients when they know what to look for. At least, we might have clients who had it in the past where our clients that might have sold a business and they've taken some time off, bought back into another business. And the first question is, right, I need my P&L, my balance sheet, my budget. I need all those things to be able to work effectively and, start growing again.
Wow, so they're way more confident.
Very confident, yeah. So, and that's a great thing. That's, if we don't want to have this information or knowledge asymmetry where we just know more and, we want to be able to, you've got to be able to impart that knowledge and help the client feel like they've actually learned something and they're actually more empowered to operate better.
Can you take us through, Darren, how you position and effectively sell the services? Break it down and gate each part?
Yeah, absolutely. I think the most important thing to understand the most important thing to avoid in this space is overwhelming the client too much too quickly, and it's from a tax perspective, it's a relatively standard. There's very clear deliverables. Most clients know they need financial statements, tax returns, tax planning, FBT lodgement, etc. Maybe clients don't know that, but the sell is quite standard, and there's different ways of delivering that or selling that service. But I think the habit that a lot of advisors may have is to talk about too much too soon. Here's the 100 things that we're going to do for you. Yes. We're going to do your FPA. We're going to develop your strategy. We're going to convert that to a budget. We're going to have a monthly board of management meeting. We're going to update that on every 12 months, and then we're going to roll your budget forward every 12 months, and that's going to be $60,000.
Yeah.
Clients just going, wow, that's just a lot to take in. I just wanted to have a discussion about why is my profit not equaling my cash. Potentially, there might be a small need or a small reason why the clients come and have a discussion with you, and you've got to lead them into that advice, not kind of 12-gauge shotgun, just here's all the great things we can do for you.
It sounds so simple, what you're saying, but I've heard, I think nearly every Expert Series interviewee has said the same thing as one of their key learnings. So what you're saying is so vital. I'm just underscoring what you're saying.
Yeah, and it's difficult because the client may even push, say, look, what's this going to cost me? You know, can you give me the full picture? So we try and talk through, share with the client that whole process, but then say to them quite in a strong way, say to them at least, we're just going to focus on the FPA. We don't want to go any further than that. We just want to focus on that. Let's do that together. Then we'll talk about the rest of that. And, you know, sure, you can give them price guidance and all those sort of things, but it is honestly, without exaggerating, it is honestly the difference between a 90% conversion rate and possibly a 40%.
Wow.
It's just getting them introduced into bite-sized pieces of advice, building their comfort levels with the conversation, helping them understand the advice, them understanding their financial performance more effectively helps them grow. So when you're giving them time to put that advice to work, if we just go, there's all the great things, it's sort of like, it's very hard to connect the value. So you don't want to be misleading at all with it, you know, be transparent and upfront about it, but just be mindful.
Bring them back to the
bring them back to the first thing, just start there. You know, it's
the first win.
Exactly. So the other part of it is almost as well, we talk about it, that upfront piece of advice or those bite-sized pieces, they manage the engagement levels quite well. So engagement's really important because it's a new service. It might be something that they've never spent money on.
Yes.
Feels like a big spend, feels like what am I really getting? So the FPAs, the quick turnaround is really important. And then having something that they can take away and use immediately. You need to put your price up by 2%. You've got to go and look to your suppliers to chase a 3% reduction in pricing. And they can go and do that the very next day. In some cases, you've had clients ring up and say, I was really nervous about putting, my prices up by 2%, but actually it's had no one said it. No, I've never really done that and no one's really said anything and it's had an immediate impact. Or I was really nervous about talking to my suppliers, but I've actually managed to negotiate a 3% discount. So they're getting that done straight away. So you're getting them involved in the advisory process quickly. So then they're kind of up there at that level, and then taking them to the next level. That's great. We understand the business now. Now when they become clear on their goals and their strategy, that's boosting that engagement to that next level. The wow factor of, well, I feel so much more in control of my business. I know where I'm going. I know what the issues are, how we fix them. They've got more clarity about the business. And then, of course, the budget's there to then point and give them the train tracks of performance. You can't be below or, we don't want to be, this is the performance profile we've got to have. Yeah. So, and then go into the ongoing aspect. So you only really want to get into the conversations about, having a monthly meeting with the client at that point, because then they're really engaged in the process.
And you've got the foundations there.
Yeah, and they trust you and help build a good relationship with them.
And now they're obviously invested. They've taken some action, so they're starting to get invested.
You're getting results.
Better results, even better results.
Yeah. So, and one of the things that happens then, what's connected to that ongoing services component, there's the one thing that advisors have to remember is you've got to manage the engagement curve beyond that point, because you could probably deliver that advisory service, the bond, advisory board process, maybe 12 months, 18 months, same reports, same conversations, still getting things done, but the wow factor will start petering off a little bit because might feel the same. They might be hitting really good numbers and not hitting a lot of business challenges. So you may not have that full of an agenda. All those sort of things might be an issue. So it takes a bit of insight, I guess, into where the client's at on that curve, and that's where you can use something like Fathom to really build out new reports, drop some innovation to, okay, let's pull in some divisional reporting now, let's pull in those managers, etc. So that's really the way that we could go, the way that we really focus on the things that we really try and manage.
And how did you get to your pricing? Did you experiment with that a lot in terms of pricing each section? Was it very much similar pricing, and you hit the right price you felt to start with, or did you have to?
In terms of
the bite-sized chunks.
Yeah, so I mean, we had to experiment with pricing. I think you could also use the financial performance assessment as you could use it as a promotional tool as well. There's no reason why you can't deliver that as a promotional free exercise, to really build those quick results with the client. So you definitely got to go on and experiment with that. But that's part comes back to the culture of how heavily the firm wants to invest strategically, how much of a strategic priority is it? Because you've got to get through that curve, and, pricing is really dependent on the firm, depending on the clients. But it doesn't have to be an exorbitant price. To have those first 3 engagements that are around about the $3 to $5 grand per engagement level.
So they're quite standard.
Yeah, that's, there's obviously some are more complex than others, but there's no reason why you couldn't have that around about that pricing.
Yeah.
And then an ongoing services fee of something like $2.5 to $3 grand a month.
Mm-hmm.
It might seem like a lot, but once you're really into that cycle and the client's getting the results, tends to really almost pay for itself because they're growing and they're comfortable.
And we've talked about, or you've mentioned this before, in some of the flywheel of additional services that you found comes off the back of setting up this model. Can you tell us a bit about that?
Mm-hmm. Certainly. So I think the great thing is that we found advisory services wasn't just an adjunct sort of, part of the firm. It essentially can become a big part of the entire wheel of services that an effective modern accounting firm can really provide, because just because we don't have the tax and compliance aspects in our practice doesn't mean you can't. If it's done well, it's an amazing catalyst for the growth of other services as well, because, for instance, the critical one that needs to be thought of is if we've got terrible accounting data and inaccurate data, the reports are in a mess, all those sort of things, then the analysis and the effectiveness of that ongoing advisory service is going to be quite challenged.
Garbage in, garbage in.
Yeah, exactly. So what it gave birth to for us was the formation of we call it our management accounting arm to our business, which we've built quite a substantial bookkeeping and management accounting practice as part of our service, which has, that's a natural conversation. If we're looking at the data, then, it makes sense that we would actually help prepare that, make sure it's accurate. That's where we really injected from our partners, myself and my business partner, Marcus. We both come from, I have an audit background. He was more in that tax and compliance space. So we really injected a lot of that, the things that accountants are doing, that bookkeepers really should be doing, the things that we can actually do to minimise risk and ensure and improve accuracy in the numbers, putting that into an end-of-month close-off process, running our clients through that. And essentially, that allowed us to build the summary of our services, which is we are essentially your outsourced finance function, or finance function as a service, which I think is quite a powerful migration of accounting firm services away from a distant accountant into you're really almost part of the team, your client's business, which is a big change in mindset for both accountants and clients. But it really enabled that for us, but also for the traditional firm that does have tax and compliance services. What it unlocks is when clients' businesses are growing rapidly, the obvious problem that arises is tax and compliance issues around they may not be in the right structure. We may be approaching, from a CGT perspective, we may be approaching the, levels of value in the business where the client might actually lose access to things like small business CGT concessions. Those are really critical points where tax advice absolutely matters. And if we don't get that right, there could be a massive amount of excessive tax that could be paid if they were to exit that business, around that point in time. So it promotes and creates the need for good tax advice and restructure advice. Obviously, the tax and compliance work itself becomes more relevant because what it gives rise to is, for example, more frequent tax planning. So putting the tax planning conversation on a quarterly basis around assisting clients to ensure what we always like to see is that we minimise the unexpected, unplanned tax bills, because that's a cash problem. If we have to settle up an obligation quickly that we weren't planning to, that's going to be a surprise and it's going to derail things. So knowing the client needs to know when their tax bills are coming, how much they're going to be, and get into that cadence of seeing tax as the cost of successful business. Obviously, we want to optimise it where possible, but fundamentally, that's what it is.
I've heard some accountants say it's good if you're paying more tax.
Yeah, clients may not agree, but yes. So that's an extension of that. For us, also, then there's the need to help clients. Some accounting firms have affiliations with mortgage broking arms to the business, or they might even have an internal in-house mortgage broking aspect. So, of course, as the business is growing, there's a need to look for funding and good quality working capital funding, for example. That creates the requirement for three-way cash flow models, working in well with brokers, because if you can have the conversation, help the brokers understand the business model, hand them the P&Ls, the accurate analysis of the business, hand them the three-way cash flow model, immediately your chances of a successful application are improved quite substantially. So that's an area that creates growth in a firm potentially. The other area for us is, of course, what we put into the banner of M&A corporate finance services. So I'm a business valuation specialist with the Institute of Chartered Accountants. So that is a designation that we have that allows us to have the conversations and, I guess, complete business valuations for clients. Because, again, as they're growing, the need is potentially for buying, selling, businesses, and there's a need to complete that valuation. So we deliver that service ourselves, and then also we support our clients through the M&A journey. So whether it's buying or selling, walking them through the initial stages of the assessment, negotiating a transaction, walking them through and supporting them through due diligence, and then obviously completion process and making sure I'm getting them to the point of settlement. So all those things, there is quite a big wheel of services that it's not, as I said, it's not an adjunct, just a division on the side. It is part of a firm growth strategy. It's not just we want to grow advisory services. There's a good chance if it's done well that everything grows because the client's businesses are growing.
Speaking of, you said you just came from a meeting where you were raising capital for a client. Tell us the feedback you got in that meeting when you were showing.
Oh, yeah. So we, in that scenario, a capital partner came on board, had a portfolio. Private equity firms tend to have portfolios of investments. This client has worked through with us from a very small stage. We've implemented our advisory service, our management accounting service, and within that is our board of management process. And, just fantastic feedback from the investor about quality of data, the fact that they can understand, they can see that there's clarity in the numbers, It makes sense to them, and it makes them immediately more comfortable working, understanding the business model and focusing on strategic matters, ways to grow that business, as opposed to getting in the weeds in the operational stuff. So that was, that was fantastic feedback, that was some of the best reporting they'd seen.
And let's be clear, this is a Fathom report, folks.
The Fathom report, of course, but that is, Fathom allows us to succinctly report on the key things that matter, but also it's scalable. It's, like I said before, with the divisional reporting, non-financial KPIs, formula KPIs, we were able to really quickly build a custom report for a client that's just unique. It's not cookie cutter. It's something that's got all the things that matter for them. And then at a deeper level, we can streamline individual reports to individuals within the organisation without giving away too much information. But it might just be sales team needs to see the sales versus budget snippet, and they need to see the trends around all the non-financial sales metrics.
Yes. And
that's their part of the report. And we can isolate that in a separate report, have a deck of reports that go out each month, and we're not sitting there in Excel trying to build formulas and taking the risks that Excel presents. So that's what Fathom enables us to really build that out. It enables us to scale with the client as they become more complex. Consolidations is another tool. If a client goes through multiple acquisitions or restructures, we can pull all the data together into a consolidated model, run the benchmark reporting to them. I've got a client that has a number of retail stores, about 6 or 7 retail stores within the network, and we have a benchmark report that we've built where we track salaries and wages as a percentage of revenue across all of those 6 or 7 sites, occupancy costs to revenue across all those sites, gross margin by location, all of those things to benchmark and allow them to see
who's doing this,
who's doing, exactly. Why is that ratio falling off? What's going on there? So again, it enables us to scale our service and not, get outpaced by the client. So, and that's also, we don't want to just be there for 12 months, get our fees and off we go. We want to be there for that full journey with the client all the way through to exit. And that's how our proposal is helping them along to have a better business journey all the way through from whenever we meet them all the way through to that ideal exit. So
that's awesome, Darren, because it leads us into this graphic that you've got. If we come to rounding out the interview and just covering off all the components of this approach that you have, can you step us through what we can see on screen? We've covered some of it, but talk us through the core components as a whole.
So when we look at the offering, we get the question quite often in the presentations that I do, what makes up that offering. It's great having that productized service, but where do we start? What are the things that we need to think about? Well, the first part is we have to think about productizing your service. So what do I mean by that? It's about giving your deliverables tangibility. It's about, in a corny way, giving it a name, giving it a structured output. So an FPA has an FPA report, and there's a set process, and for every client that engages us to deliver that project, they get X, Y, and Z. So it's clear deliverables. It's not a concept that varies wildly across depending on the client. It's fundamentally clear. And then productizing your service into that workflow of what we've just run through and spoken about today is that, we go from FPA to strategy to budget and then bring the client into that ongoing. It's developing your IP around that sort of connected process. Because if you're just doing an FPA, it's more than likely you're going to have the discussion at the end of the meeting where the client will say, what's next?
Yes.
And you have to have a what's next. You can't say, well, we'll just leave you to it, and you just, take the report and run
give us a call.
We're immediately positioning ourselves as the expert in that area, so that the client, if you hear that what's next question, that's a great thing because the client's engaged, they want to go to the next stage, and that's your trigger point to go into strategy. But so we've got to have something around, you have to develop your thoughts around productizing your services. You've got to have the approach of having a consistent process that's repeatable and standard, but also agile enough to adapt to the client's industry or complexity.
Yes.
So you might have quite a large client that has multiple businesses in their group. They have a portfolio approach to business. You might want to do 3 FBAs, one for each division.
Okay.
You might have a really simple client that is, has a big growth strategy, really wants to understand their first business, and you could actually simplify that FBA to maybe just maybe 4 or 5 of those key conversations, not all of them. You could bring in divisional analysis, all those sort of things. It just depends. So it's just about building that out. And if you have that consistency and that, but still have some agility in it, then you've got to think about what is your upfront bite-sized pieces of advice, because I think you have to have one-off bite-sized engagements at your starting point in order to build that credibility, to build that engagement level with the client. We call that, I guess, like a bite-size, because they can get that quickly, we can deliver it fairly efficiently, and then get immediate, start working on the business immediately. So we've got to have a think about that. And then we've got to have a thought. You've got to develop your thinking and IP around what does your ongoing service look like. So it doesn't have to be monthly. You might want to take a quarterly view if you've got a large portfolio of clients that you really want to wholesale this type of service. You might go quarterly initially. But the key focus for us is about the accountability aspect of it. I think that's what clients, they really want to be challenged. They don't want people to sugarcoat it. They don't want the echo chamber. Yeah. They want someone to challenge their thinking and ask the hard questions and use some objectivity, because that's what you're there for. And then really about, how do we encourage that growth and drive growth for the client, help them grow. That's the objective of that ongoing aspect. And so if we have those pieces, if you have sort of if you're mind mapping each of these boxes, you'd want to put notes around all of these areas. And then what we take the approach of about is fees. Obviously, what do we do around fees? For us, it's typically a fixed fee approach. We have a fixed fee for each of those upfront pieces of work, and then we have a fixed monthly or regular fee for the ongoing work. And we have an outside of scope caveat, so to speak. We might have a scenario where a client is engaged on a monthly basis and they have an event that arises where they might need funding, might have an acquisition that comes up. Of course, you can't have that all included as this all-encompassing monthly fee. So we have an outside of scope clause where we just simply say to the client, we'll give you a quote for that piece of work, give you hours budget, hourly rates, agree on it up front, and then you start the work. That tends to be, that seems to be sufficient with clients. So that means it also works for us, because it means that you can manage predictability of your cash flow a lot better, because a fixed monthly fee, you can plan and bank on it. You can set capacity requirements in your firm quite nicely, because you know what sort of revenue you've got to work with.
Yes.
And so that's a really important thing to think about. What is the fixed fee? I think I've struggled to see an advisory services, ongoing services model that is just charged by the hour, because I think you may not communicate the value that well when you do it that way. We may overcharge some months, we may undercharge some months, and the client's always going to have that fear factor of what's the bill going to be this month.
Yes.
So that's important. And then, of course, your technology stack. You can't deliver this service without a really good quality tech stack. So for us, Fathom plays the role of delivering that, helps us deliver the FPA. We've got a standard FPA report template that we build out. We have our board of management process that uses Fathom, pulls in the budget, the actual, all those sort of things. And the Fathom forecasting tool, of course, feeds into that. So, of course, you've got your budget, initially your budget, but then you've also got the updated projection. So being able to trend, this is what we had planned at the start of the year. With these changes, it's now this. And looking at that with the actuals, in light of the actuals, is really helpful and really important. So having that sort of technology platform integration is really important. To do it all in Excel, I think it's pretty inefficient to do it and risky because, you've got a high risk of errors when you're using Excel for that purpose. Whereas if you're pulling the data straight out of Xero, assuming the data's good to begin with, it's a lot less risk around that.
And the ability to flex, I think you mentioned it earlier, that flexing over time as the client grows and you need more detail in the report, the ability for Fathom to add additional layers of complexity and to keep the client engaged.
It is. It's really important because if we don't introduce new innovation into the engagement, the client may just have the feeling that maybe they've outgrown you when that's not true. It's actually that we've just got to be proactive enough to identify when do we introduce these new features and new bits and pieces. So just needs that insight into where the client's at.
Darren, what's your second favourite piece of technology in your tech stack? Assuming that Fathom's number one.
For us, workflow management's important. So we use Asana for that. So Asana is a good tool. It's basic. It's pretty customizable. But part of all of this is you've got to be able to understand what your deliverables are for each engagement once it starts stacking up. What your due dates are, who's responsible, what are the action items that sit, after board management meetings, for example. There's a lot of action items that fall out of it. How do we manage that? Also, internally, what your processes are. So a workflow management tool, no different to a tax engagement. There's processes that have to happen on a repeatable basis. So having a deposit of data or, process documentation within each job, so to speak, is really important. We also use Loom as a really good tool for communicating, recording. Okay, this is how we're going to prep this board of management report. Loom we can record that really easily, and then you can use that as part of your training material.
That's great.
So there's some cool, really nice tools out there that I think are quite inexpensive, but just really effective.
Practical.
Our tool, to answer your question, is probably just any tool that helps us manage the workflow and the workload around this process. So I think just observations over time about because we have done some work into probably helping implement some of this a little bit and looking at some of the observations. The key is that advisory is a strategy. It's something you can't just tack it on to your service offering. You have to consider it as part of your growth strategy. And that means that it has to be supported at a partnership level, because if it's not, it's always going to be seen as a distraction, perhaps from delivery of core work, and something that might keep younger staff engaged, but not really that much of a priority. So when it's not a priority, that's makes it very difficult to embed this effectively. You have to look at your team composition and understand personalities and the capabilities of your team, in that there are naturally, if you look at the different personality types, there are certain personality types that are more suited to advisory services, not necessarily whether they're an introvert or extrovert. It's more so around, for example, disc profiling. If you look at the different profiles of personalities, you'll see that there's some personalities that are more assertive, some that are more analytical and hungry to get into the detail, and some that are more happy with just, repeatable work that is quite consistent and doesn't have a lot of variation. Just, you've got to look at the team. It's not necessarily the right approach to just push everyone all of your team into this division, you've almost got to understand who's a good fit.
Yeah, right.
So that's important. But I think you've also, at a leadership level, have to encourage the team to have a go. You've got to actually, there has to be some school fees in the sense of you've got to learn, you've got to develop, have your 360 after a deliverable, what went well, what didn't. It's part of the development of services. And if you don't encourage people to have a go, then they'll never actually step out of that comfort zone of, the nice, sort of safe, repeatable work environment.
How do you champion that? Like, how do you model that in your firm yourself?
Oh, I think you can do it internally. Even, you could ask your team members to present the FPA to you internally as a partner and critique them. And let them, what do they say? It's like fail fast. Have a go, present it in a safe environment, talk through some of the issues, and then help guide them on, well, actually, GPs at this level, so these are the key issues you really need to think about when you see that happening. That's a teaching opportunity. So there's ways you can do it. It's not necessarily just sending a graduate out to a client with an FPA report. So it can be done internally. And then I think the other one is, as I mentioned in my discussion about how you communicate this service to the client, is avoiding that overwhelming. If your firm's going shotgun approach, tell the client about everything, all the great things you can do for them, I think the conversion rates could be quite low and they'll get overwhelmed pretty quickly. So you've got to walk them through that process. And then, really the last piece is probably, I would say, you've got to invest in the resources to create the capacity. I mentioned that compliance vortex, and if you're running at 80% utilization in your practice, using 80% of the available hours of your team, it's going to be very hard to develop this service because you're just not going to have the capacity to be able to allocate time to it, even though it's relatively efficient to implement. But you do have to invest in some excess capacity and see that as an investment, not a write-off, within reason. It has to get results at some point. There has to be some accountability for it. But if you don't invest in that, you're unlikely to get that extra output out of an already stretched team. So again, it comes back to strategy. It's got to be part of that partnership-driven strategy.
Good.
I was going to ask, actually, when you divide up the balance scorecard, what do you break it down into? It's financials, customer focused.
Yeah, so that's people at the first leading perspective is your people. Then we go into your processes. So, and the idea and the thinking behind those two is that if we have great people, well-trained, well-paid, aligned people, then they're more than likely to stick to the process and also probably contribute to improvement in that process. And those two areas, if we get those things right, then the outcomes of that is that you have the outcomes you're looking for with your clients or your customers. So if we have great people who deliver your service or your product really well in full on time, you're going to have a happy customer, and they're probably going to be a brand advocate and all those sort of things. And only then does the last perspective fall into place, which is the finance side. So if we have the opposite, if we have terrible people, if you deal with a business that just has terrible people, they're not well trained, they're not aligned to processes, they all do things in a different way, job's late, doesn't get delivered on time, creates an unhappy customer, and an unhappy customer may not pay their bill on time, they may have complaints, they may want discounts, so that damages the finance aspect. So the whole idea is built on the principle of correlation, that if you can get the leading perspectives right, the lagging perspectives, being the customer outcomes, the financial outcomes, those are the things that follow.
Yes.
So the idea was that managers should just focus on the lead, people, processes, the rest will take care of itself. And funnily enough, accountants look after just the financials. So we start our board meeting, we look at just the P&L. Yes, we made a profit. It's cash in the bank. Great, let's go for an early lunch. Nothing more to talk about. What the balanced scorecard teaches you is that there could be this issue brewing at a people level, which will evolve into a process problem, which will evolve into a customer or a client negative experience, which will maybe even 8 or 9 months later evolve into a financial problem. And then it's too late to rectify that because it takes so long for that wheel to turn and get that improvement. So it's a nice simple way of thinking about it, but it breaks that strategy down into what does your overarching strategy look like across those four perspectives. Yeah.
I love that. I mean, the balanced scorecard is usually just 4 squares.
Yeah.
I've never heard anyone say, this is the leading indicator or leading lens to look through something. So I have to say it's quite refreshing to hear an accountant talking about the people in business being the very first thing, and I think that is a brilliant way to end our interview. Well, I love the way we've ended our interview with you, Darren. Thank you so much for your time.
No problem.
There's one question that we ask every guest on our show, and it's this one. What is something that accountants aren't talking about enough that they should be talking about more, in your opinion?
Look, I think probably the key thing that I think of is just part of it's in line with our advisory discussions, but probably don't talk about getting alongside the client enough in terms of, the better your understanding of the client's business. It's very easy to just treat the client transactionally, go through the deliverables, get it done. I think possibly what may not be spoken about enough is, how much do you really know about your client? How much, what are the soft sort of the external factors that might be going on? Because the reality is a lot of business owners, you hear about some pretty serious incidents with, business is tough and it's mentally tough. And, so advisory probably puts you in the hot seat of really getting to know your clients, and you see the good, the bad and the ugly, as opposed to just meeting the client once a year. You may not even see that. So, just, it's probably a conversation around, how well do you really know your clients and what's going on? Because they do look to you eventually as you build that relationship. You become really you build a strong relationship with them, and you do, you are influential in their business life, and that's an important role to play. So,
Well, Darren, thanks so much. We really appreciate your time. And if you'd like to reach out to Darren, you can contact him on LinkedIn, and he'd be happy to answer any questions.
Definitely.
And we'll look to do some more follow-up content with Darren. So stay tuned and watch this space.
Thank you.
Thanks, Darren. Thanks, Tom.
Thanks.